Welcome to our today's feature presentation, Leveraged Trading Strategies. My name is Thomas Barman and I'm your presenter today. And before we go into the details, I want to make you aware of the risk in trading and that I'm here as a trader and educator, not as a broker, dealer or financial advisor. Knowledge is power, and the knowledge of how to trade with leverage is very powerful. So we talk today about the opportunities and how they occur, how you can achieve the ability to participate in them, the actions you take, how to limit your risk, because that will be very essential for your future as a trader, and how to achieve the leverage return on investment, ROI, or return on capital. And we go in the details now. Return on investment is the key performance measure if you invest capital. And that's what we do in the financial markets. So let us take a look of what it entails, how it's calculated, and what are the key influencing factors on the return on investment. In simple terms, ROI is the return divided by the capital engaged. So that looks simple, that looks easy, but there is more involved. Let us jointly map out the key influencing factors of the return on investment. Here, one is clear, the basis, or here the denominator of the equation, capital requirements. So how much capital goes in, but then you see it's important to understand what's the asset price move is. Yeah? So how much return can you make? If you use a leverage instrument, how much you can leverage your return by this. Yeah, the frequency of change is important because it tells you how often can you participate in an opportunity of an asset price move with a leverage, and risk control. Yeah, so how much risk can you accept on every trade to limit your risk and to prevent drawdowns, and that has to do with the probability of the system that you're using and the engagement rate. What's the engagement rate? It just means how much of your capital are you having actively working for you, producing a return on investment. Yeah, because most of the time we recommend to be at least 80% engaged with your capital in the market, but it has to find the right assets to invest in, the right leverage to give you the return, and control all the other factors so that ROI is simple and on leverage for you. ROI is a performance measure. It lets you compare or measure the performance of an individual investment or compare different investments if you have a choice. Today in our presentation we want to focus on swing trading. Swing trading we define for opening and closing positions between 1 and 10 days, so not day trading, not intraday, and we do short-term stock trading as a basis because there you can expect a price move of 2 to 5%, and with the leverage we want to look how much more can you achieve by choosing different instruments and a system that helps you to achieve high probability setups. And so then I already in advance can give you an idea because we're going to talk about leverages between 15 and 65%, and that's the conservative statement that you can achieve instead of 2 to 5%. Does that sound exciting? Absolutely. Is it achievable? Yes, but you need the right knowledge and the right tools on hand to participate in that. Leaving Forex aside, there are three basic opportunities for trading with leverage. One is stock trading, but you need to obtain portfolio margin. So what is that? Portfolio margin limits you to the risk of the trade. So you combine stocks with options on the long and the short side, and with that you limit your risk, and with that you leverage your return because you're only accountable for a fraction of the share price instead of like a 50% margin. That gives you the ability, with a meaningful concept on hand, to achieve between 20 and 60% return on investment, and the risk that's based on our statistic is about 1.2 times the return. We'll use that for calculating and crossing over to see which one of those gives you the highest return opportunities. Yeah. Next is option trading. When you choose the right option, you have a good chance for 65% return, but on the other hand, your investment in premium is your risk, so you have basically 100% risk, which we can limit to a certain degree, but that's we take as a calculation basis. Or the futures trading, depending on what we use, and we use here the maintenance margin. Other brokers, they give you a day margin which is much smaller. You can engage into a trade with a $500 investment and you have no limit to the upside. But here we take the maintenance margin that CME exposed or imposed. CME is telling the maximum risk in an overnight move of the asset if you don't use a stop. We always use a stop, and so therefore that wouldn't be the case, but still maintenance margin is what you have to hold in your account to hold a position overnight. But still 15 to 50%, that's super duper, and we'll see which one of those we prefer and why, and how you can make the highest return out of those for you. Before we go there, let us talk a little bit about high probability. We define high probability for starting at or above 65% of an attainment rate. So here with a bag of marble experiment, it would be 11 winning marbles out of 9. That's not 65%, that's 55% in the common system, yeah, just to get your attention. However, if you do the 65% system, you have 13 out of 20 winning and 7 losing. And so if we use a simple Bernoulli experiment and say, okay, what is my chance of winning 6 or more times out of 10 draws? The idea is pretty clear. 65% system has a 75% chance of 6 or more winners. At a 55% system, you're only at 50% chance. You're random. Yeah, you can celebrate your winners, but long term, you'll not make money. So therefore, we have algos and things developed that help you to trade at high probability opportunities. Now we go into the details and share the base knowledge with you of how to trade with leverage. Yeah? Stock trading, you need portfolio margin. For obtaining that, you have to hold more than 125K in your account, and you have to pass a test so that you know what you're doing. Yeah, so the broker is going to ask you 20 questions, and you have to pass by knowing more than 80% of those questions asked. Then you can move ahead with portfolio margin, and you can source out of about 1,000 stocks with options, because that's the combination you need to strive for, where you then can later on find the ones that you feel they move to the upside or to the downside, and then you participate in that opportunity within trying to limit your risk. However, the risk limiting has a certain component to it where it fades out a little, because you can only have a risk protection at about a double of the expectation of the move. Yes, you will take counter action prior, but that's the algo and that's the prerequisite for trading it. There's certain things to consider. Still, it's a wonderful instrument. Imagine instead of 2% making 20 or 50% return on investment. A very different ball game. Just not many of the traders who hold that amount in their account know how it's done, and we teach that in our mentorships. Trading options is definitely attractive. You need to obtain your option level 3 with the broker. That's just filling out some paperwork and show that you have the knowledge to do meaningful decisions at that rate. There's about 250 stocks that offer stock options at a meaningful option chain, meaning enough volume day by day, enough open interest, and also tight bid-ask spread. Yeah, there's multiple variables to cover on option trading. We'll simplify it through our mentorships and concept, but one thing you have to put in mind, you are buying a time decaying asset. So you'll have to be right in direction and time to make money within option trading, and also you have a max risk control at ease, because it's the maximum risk you take. The way we teach option trading is the premium you pay. Yeah, or if you do a spread, then the width of the spread is the maximum control. We are not proposing any unlimited risk trades for retail traders. That is something that you should never, ever, ever do. Our third method to share is futures trading. You need to have a futures trading account, so that's, you have to fill out paperwork as well with your broker again. There's about 20, give or take, well tradable futures contracts that have enough volume and a tight bid-ask spread to participate in shorter term trading. Remember, we do swing trading here, or want to do that. And you can have very simple one-click executions here. Bracket orders in at your buy stop, in at your sell stop, and you're covered by the stop, and you have a clearly predefined exit target. And if you want to carry out a trade overnight and not be exposed to maintenance margin, you just close your position like at 4:15 end of the day, and you reopen it at 6, and this is how you can get around with not having a maintenance margin for an ES contract of 17,000 equated to your account, but to trade with the 500 margin that some of the brokers grant you if you trade with a bracket and just intraday. Financial decisions should not be equated emotional. We should be able to calculate them. So what we did here is we make a risk-based quantitative analysis. Yeah, so we say, for example, if you trade with a 55% system, yeah, so that's the 0.55, and you make a 50% return, however, you have a 1.2 times risk that you allow the trade, and so that in 45% of the cases, then you have a good chance of making 0.5% return. So that's close to nothing if you put a little of the cost of the trade, slippage, bid-ask spread, and also your commissions, or basically your trading water. However, if you trade with a 65% system and you do the same equation, you have the chance for an average 11.5% return per trade, which is pretty good, and you can limit your risk at a certain degree. The max risk is about 2 times what you make, but you limit it at 1.2 times here by our statistics and calculations. On options, if you trade with a 55% system, the way it's spelled out here, you have an expectancy of -7%, so you will bring money to do the trades, while if you move up to the 65% probability system, your return expectation average is 14%, and that's also how we calculated up with an average return of 30% for the futures trading, a 14% return. It's conservative, but we want to do this to give you a comparison. All of these are leveraged returns compared to stock trading between 2 and 5% on a swing trade, but here you'll see certain preferences. While I have to be right in direction and time with the options, here that favors the futures, because there you have a risk limited trade with a limited opportunity of individual assets to choose from, and so with that is currently our short-term trading instrument we favor the most, because we can easily trade in both directions of the market and we are not having time decaying products. Unfortunately, most retail traders do not work with systems that have clearly spelled out entries, exits and stops, and the result is that 76% of, in particular, the shorter term traders, they are losing money. And we want to help you to not be part of that, to move you to the 24% of the traders that constantly take money from the financial markets. Let me share with you what it takes to be part of the 24% successful traders. So it starts out by following the price action on the chart. Your system needs to work with the price actions, predictions, assumption, seasonalities, assumption. That'll all not work out. The price action has to be determined mostly by a modern algorithm to tell you what best to do. The chart shall tell when to buy or sell. Yeah, backtesting. Most systems are not well backtested. We are more than 10 years in that business, and we spend more than 20,000 hours within validating what we do, so we know what we talk about. And in a lot of cases, guessing is the part of being a share of the 76% of losing. Therefore, we don't want to guess. We want to have hard-coded entry, exit and stop decisions, system-based, put on the chart for you to follow with buy stop and with sell stop orders. But that's not all. That's not all. There is a lot to do on the managerial side of the business, and we'll go into the details. Trade management. A trader with a plan will do better than one without a plan. And what's a trading plan? It tells you when to trade, how to trade, and when not to trade. And a trading plan is your guidance. You are the captain of your future and destiny, going through a checking procedure to know that you do the right things over and over before you let your airplane of the investments start and fly. See it like this, do it like this will be essential, and we help you to write that plan. It's always individually, and we'll define then at what instances will you trade, when not, and how. Traders who are patient and let their winners come to target, they'll make more money than those that are impatient and cut the winners short. Yeah, no profits early. There's a dot on the chart that tells you when to get out, and that's what you're supposed to do. If you start second guessing your system, you'll make either no profit or very little from your trading endeavors. And considering statistical volatility will be essential for where to put your stop. For us, it's easy. The chart will tell the stop goes at a place which is easy to be found. It's either a red crossbar or a certain SPO movement above or below the entry candle, but that's very, very essential. And because, you know, small stops make you getting out of a trade and that it commences in your direction. Two big stops have the ability to make drawdowns in your account. That's what we want to prevent, and so therefore we always with our systems consider statistical volatility, and you saw here we use like 1.2 times the potential reward, but we measure through our SPO the price move, give it a little more on the side of the stop, but with a high probability system the expectation ratio out of that is positive, and that's important. And there's more. Follow repetitive patterns. There is a pattern on a rising price and a pattern on a falling price. It's just not so well known and people don't consider it in their trading, but we'll teach you in our mentorships of how to do so. Yeah, and only accept a trade when risk reward is in a meaningful balance. If it's outside of that, because you had a huge candle to the up or downside where you need to place your stop on the other side of the candle and it'll not pan out, then risk reward is out of balance, or don't take it. We'll have systems which we call the never loss trading timeless concept, where that is always in balance and giving you a huge advantage to trade. Yeah, position size will be a percentage, but also based on the strength of the signal that you trade on. All of this we put in a matrix together for you and with you, so that you have clear-cut decision-making point at that signal. That's about a good proportion of what you do, and it's percentage based, so meaning your earnings make your account higher. Percentage based, you can invest more per lot, and so that will help you to build it all up. And key will be discipline. Be prepared every day, following a plan, and clearly go into the trade within knowing what you do. That makes a key difference. But you see, there's not only one point, there's multiple, even 10 which I put up here. All of that considered makes you part of the 24% successful traders. If you just not do one, you might already be out of the game. We teach all of this in our mentorships, yeah, where we show you the indication of the system, how to limit your risk, where to find the trades, how to manage all your accounts. Yeah, if you have a 401k, an IRA, a margin account, a custodian cash account, or whatever you do, yeah, so you can manage all of these with the right knowledge on hand, and that's what we teach in multiple hours of individually working together, because we work one-on-one only. What you see here is an example of Goldman Sachs on the daily chart. So here important, SPO 7.42, it's measured at the last bar over here, but at any trade situation you see we have clearly spelled out price thresholds, so buy above 335.70, buy above 359.14. If that's ticked out in the continuation price movement of the next candle, then we trade, and here we had a 2 SPO target, so we took profit right up here. You see there the measure was between April 21 and May 10. Here in that asset we had 2 nice opportunities, and we measured to come to target 2 shall take 1 to 10 bars. Here we were there after 3 bars or 3 days. Nice swing trade, and you could have participated either through a leveraged opportunity by obtaining portfolio margin, or using here in that case our Delta Force option trading strategy from Never Loss Trading, because they will give you the opportunity to make a very high and very nice predictable return if that trade situation occurs. Above 65% in a matter of 3 days, or here in a matter of 4 days, that is a huge return that you can strive for by knowing the concepts and applying them constantly. What I'm sharing here is our timeless example. So time is not the decision-making factor, a price move is. You see the chart for the euro future, and you see 5 trade situations that I now want to go through with you. Yeah, we are coloring up moves in blue and down moves in red. If there is no direction like here, then we have a zone of ambiguity. When the ambiguity zone is over, then there is most likely a directional trade coming, and it did here in situation 1. And we had defined we want to carry that out to that target. So 1-2 bars later we were there and we could take the profit. And then the situation repeated itself. So you see here situation 2, another buy signal to the upside, defined target. Yeah, so that was reached after 2 bars, here in that case 2 days, and the situation goes on to here, and again there was the target here put on the chart and we took our profit. Then we came here to that situation which had its target here and it came to profit, and then finally all the way up to the top this one got stopped. The red crossbar is the stop, but count it up with me. Yeah, so we had in total 4 opportunities that we brought to target, 1 short, 3 long, and 1 that failed. So that's an 80% attainment rate. That is high probability. I will put together another video just on futures trading, because at the moment where the markets are not so decided, futures trading offers an extraordinary opportunity for you, and I want to share more details than I can and want to in that presentation. If that sounds exciting, yeah, just write us an email and you'll be part of that. I'm adding here the chart of the overnight movement for the E-mini S&P 500 futures contract on May 12th between basically midnight and in the morning at 5. So it goes through the day. I just wanted to take that opportunity to tell you it'll work around the clock. Yeah, so that's the key. And you see here those situations spell out. When targets are reached, we'll take the opposite direction. They spell out, they have their targets, and when they are reached we'll move up to the top and to the bottom, and we'll do that with a very high probability. So you see here 3 times we came to target on a quick note and a 4th time right after, and here if we took that trade we would have been stopped. Yeah, so that's again 4 out of 5 winners, 80% attainment rate. If you want to be part of that and learn how to do the never lost trades on timeless and on time-based charts, don't hold back. Give us a ring and call us at the office or write an email to contact@neverlosttrading.com and put your consulting hour in. We always limit our time. We'll make ourselves available because we also want to limit our participants in this. So therefore don't miss out. Use the opportunity. Talk to us to be part of the highly leveraged traders. Thank you very much for your attention, and we are looking forward to hearing back from you. Bye-bye.